Forgings, that's the stock in focus. It's risen about almost 100% in the last 1 year. They're betting on a buoyant CV outlook as well. They're looking at a sizable investment. So let's chat about all these factors, what they plan to do with their exports as well. Shankar Krishnan, MD at Forgings, joins us on the show right now. Krishnan, hi. Mr. Krishnan, morning. North America Class A truck sales have rebounded immensely, and overall the sentiment we've seen in the last 1 year for the CV space has been very buoyant globally as well. Then why is it that you're looking to reduce exports exposure and focus more on the domestic market?
It would be incorrect to say that we are reducing export exposure. It is just that we see greater growth in the domestic market this within quote season, as we so to say. So this round of expansion, we see more traction in the domestic market as far as our sales are concerned.
Okay, fair
Exports
point.
is not coming down. Export is also growing at a significant clip. It has grown by 30% last year and is expected to grow by another 20% in the couple of years to come.
Okay, fair point. So this capacity expansion that you're looking at for will be mainly for the India market, you're saying?
In terms of large numbers, it will be for the India market, but a significant portion of it also goes for exports. So it's by both these markets together.
How much do you intend to raise your capacity by domestically?
We ended last year with production of 48,000 tons. And this year we should do somewhere in the region of 65,000 tons. And the next financial, which is 1920, we should cross 100,000 tons per annum.
Okay. Now, you've also acquired DVS Industries earlier this year. That's a manufacturer of the crankshafts for CVs. Is this a segment that you will really look to penetrate into? What kind of targeted growth do you have in mind for this segment?
Well, after having studied it and made the acquisition, we find that there is a decent amount of scope over there. To give you some numbers in perspective, when we took over DVS, we were doing 4,000 to 5,000 cranks a month, or they were doing 4,000 to 5,000 cranks a month, which we have cranked up to about 12,000 last month. We crossed 12,000 in June, and we expect to hit about 20,000 in the next few months by December of this year. So we're looking at about 4 times growth or 400% growth as far as DVS is concerned from the time of taking over.
Okay. Let's also talk about individual segments and your overall domestic business. What is the target over here? Because we understand that you're looking to grow the domestic business, and in the coming years it could account for potentially 60% of your total revenue. Can you just, I know you spoke about overall in the beginning about increasing your focus here. Can you just tell us what is the rationale of this strategy and what kind of revenue potential you have for the domestic market?
See, what we follow is a very simple rule. We do what our customers want us to do. So if export customers come to us, we grow with their plans. And if domestic customers want us to invest for them, we do it with their... so we're focused on what customers want rather than... And of course, we also have a broad, very clear idea of where we want to be and not end up in the wrong sectors. So the domestic customers have been looking at very buoyant markets. As a result, there is a lot of growth over the Indian market. Personally, I too am very bullish about India. Given our demography and the very young nation that we are, I am very bullish that the Indian market will grow by leaps and bounds in the months to come. Several economists have also pointed out that we are now what, a $2.5 trillion economy, and it has taken us so many decades to get here. We'll probably double ourselves over the next 5 to 7 years and double ourselves again to reach a $10 trillion economy by 2030. So India holds a lot of promise, in my opinion. A lot of promise.
Okay. So clearly you're really betting big on the overall domestic business and, growing. You're talking about expanding your overall capacity, very ambitious plans on that front. So what level of revenue growth then are you targeting for the company for the year end? I believe you aim to cross 1,000 crore revenues by the next fiscal. Are you on target?
I think we should do that comfortably. We should do that pretty easily. As we stand, I think we are on target to hit about 800 plus this year comfortably. Maybe with some good ramping up, we might even challenge the 1,000 number this year itself. But that might be a bit of a task. Let's see that. Next year for sure we will be crossing well into the 4-figure mark.
Okay, and just finally a quick word on where you see your margins.
I see margins at the same level, slightly positive perhaps because of the overall volume growth. Margins should be slightly positive, but not too much because the domestic market is very competitive, extremely competitive, and slightly lower in realization than the export markets that we serve. So overall put together, I would say slightly positive on the margins.
Very best. You're sounding very optimistic. Thank you so much for taking time out and joining in, walking us through your domestic growth plans, your capacity expansion, margin outlook, and how you're comfortably on course to clock in 1,000 crore revenue by the next fiscal. Forgings active in trade today by a good 2%.